Welcome to Markets Now. I'm Michelle Rook along with Shawn Hackett with Hackett Financial Advisors, and mixed trade on the closes today in both grain and livestock futures. And let's talk about the grain trade first of all, Shawn, because we're really entrenched in a weather market, and the row crop sector at least is kind of trading forecast to forecast right now, isn't it?
It really is. We've had the driest 60 days in the second driest 60 days since 1980. Only in 1988 did we have a drier 60 days leading into today. So the market, is obviously worried about that, because if that dryness continues into late June and July when we start to pollinate, then this concept of 180 crop yield is going to greatly diminish and could be something far more sinister. So even though demand is maybe not as good, and maybe the safrinha corn crop in Brazil is looking good, we still can't have a U.S. crop down too far without having to put considerable amount of premium back onto the marketplace. So that's really an important driver for the next 10 days to see if this weather, this wetter weather that some of the models are putting in actually verifies.
Yeah, because we've had it in the extended forecast and we've been trading it on and off here for the last couple of weeks, which seems a little bit early. When or at what point do you become really concerned, though, that it will shave yield?
If these rains don't really deliver, or they don't really change the moisture profile, and we get back into the dry pattern and heat comes in, I think if we get into that fourth week of June, we are going to start to do irreversible damage, and the market's going to respond. If you look at 2012, the market really started to respond in that third week of June. In 1983, we responded the week after the 4th of July. So that late June, early July timeframe is your mission critical. The weather's got to start delivering better with results, or we have to put a heck of a lot of weather premium on, because we're going to have a short crop.
So let's talk about that, because if we miss this next system that everybody keeps talking about, how much weather premium do you think the market needs to put on then at that point?
If we undeliver this weather system like we've been doing up to this point, where they keep putting rains and it doesn't deliver, we don't really deliver this rainfall, and we go back to hot and dry, I mean, you're looking at a corn market that I think, if you looked at 1983, we put 40% on the corn market. If you look at 2012, we put about 45% onto the market. So, it doesn't mean that we have to perform exactly the same, but we would be probably looking at something, well north of $6, and then keep adding it as the weather continues to support a shorter and shorter crop. So
what if it does happen? What if we do get some rain? How much lower do you think the market needs to go here? Because honestly, with the amount of dry areas that show up on the drought monitor, it's going to be pretty hard at this point, even if we get that rain, to get to these record yields that USDA is predicting, isn't it?
Yeah, I really think it comes down to, is it a major pattern change? Meaning, is this change going to continue and we're just going to keep getting good rains in July and we're going to stabilize the crop and we're going to resuscitate it? Or is this just a pause? Is this just a rest and we're going back to this dry pattern? Because if it's just a shot in the arm, but it's not a permanent weather change, we'll take maybe a 50% retracement of the rally we've had, and then we're going to go right back, putting it on and going to new highs. This has to be a permanent weather change, not just a flash in the pan.
All right. So we're going into a WASDE as well here coming up on Friday, and talk about your expectations there, because we still have poor demand for old crop, at least export wise. But as far as new crop, we already kind of know that, what I just said, USDA thinks we're going to be at record yield. So what could change, the outcome of this report this week to change the market trend?
I mean, I think the only thing that the USDA may decide to be emboldened on is to change their view of Brazilian safrinha corn crop. The weather, they've had a great timely rainfall here at the tail end of the growing season there. It looks to me like the crop's gotten a little bit bigger. Maybe the USDA increases their estimates there. Other than that, it's hard for me to see they're going to make any big changes. But we did put, 40, 45 cents on the corn mark, for example, from the last bearish report. Do we bring some short-term sellers who say, I'm going to take profits because, these numbers don't look good? Or are they going to just continue to say it doesn't really matter what the USDA says because they're not looking at the weather? July is going to be worse. I kind of feel we'll get some soft pressure, Michelle, but nothing noteworthy. I just don't see the USDA making any major changes that's going to alter the market's perception of reality right now.
Even in the wheat market, Shawn, where we may see USDA have to bump up some of those abandoned acres in the South?
Well, I think we know that the U.S. crop's really, really bad. I think we've been trading this really bad crop for a long time. And, we've had periods where KC wheat, for example, has had a big rally and then come off. It still comes down to what is Russia going to do with their cash price? They've continued to lowball the world market. They've continued to aggressively sell. And that just makes it very, very difficult for the KC wheat market, for example, to put any sustainable premium when Russia is just undercutting the market. It's very difficult. I really feel the wheat market's not going to move on increased abandonment acres. It's going to move when we see cash prices in Russia start backing up to the upside.
Well, and then you see the Saudi Arabia tender this morning, over 625,000 metric tons, and that went to the Black Sea region. And so they, like you say, continue to undercut us. So what was it that actually popped the wheat market here today?
Typical geopolitics. The stories came out that there was a very unusually aggressive offensive in Ukraine into Russia. And then Russia then immediately responded in saying, this time we're definitely, absolutely, positively not going to renew the grain deal in July. We mean it this time. And so, some short covering came in. And, we've seen this story before. I don't know. I just don't think geopolitics right now with these kind of back and forth stories is going to drive the market higher unless we have something really, really new that the market feels is different than this tit for tat that we've been seeing for months now.
Cotton market took a hit here today, but we've been sideways for the most part. What's it going to take to break us out of that range?
Well, look, we've had very, very good rains in Texas. The last couple of years, abandonment acres in Texas have been extraordinarily high. The market is beginning to get comfortable that the harvested acres in cotton are going to be very strong, and it's keeping the market under pressure. One thing I think could turn the market up, it's not something that today it's going to happen, but when we look at Chinese weather for cotton, they grow cotton in a very different region than the northwest region of China. They grow all their cotton, and it's been the driest period over the last 3 weeks and one of the hottest periods in about 30 to 40 years. It looks like that trend's going to continue. And if we start getting to late June into July, and it looks like that their cotton crop is going to really be hurt and come way off from what was expected, they may need to come to the market and be much larger buyers of U.S. cotton than the market is anticipating, and removing some of that bearish trade from the rains in Texas. I think that's a new story. The rains in the Texas is an old story, but the China news could be a new story that captures potentially a reversal to the upside. I'd be looking for that for maybe a big change in the cotton market as we approach July.
Got it. And outside markets, let's talk about crude oil. Of course, we got the announcement that Saudi Arabia is going to cut production. We initially reacted pretty positively to it, but we've certainly backed off here late in the day.
The nightmare of the trade of the last time they did this, where we rallied the market strong and then we gave it all back and more. I think the market's very nervous about trading supply distortions from OPEC and Saudi Arabia. I think they want to see real demand coming back, Chinese demand coming back. If we see that, then these cuts can matter. Remember also that Russia is not playing, or has not been playing ball. They've been selling oil as quickly and as fast as they can to raise capital. So remember, OPEC is only as strong as its weakest player. And if Russia is going to undercut the Saudis' attempts to hold oil back, it makes it less impactful and less effective when we have weak demand that's worrying the marketplace.
You bet. And let's talk about cattle lastly. More new contract highs here today. And I think we took out the April highs here in the spot month, in addition to the fact that we had record cash trade last week. And of course, the big question is how long can you keep the bulls fed here and keep the market going?
Just seems to me somehow the players in the industry just didn't get themselves covered and set up for the grilling season. You'd think they would have done that. Doesn't seem like they have. Seems like they're short product and they're panic buying into the market to fill orders. But looking at JBS earnings, Tyson earnings in the last quarter, both companies had their worst quarter, I think, in each company's history. They're not making any money. And it's, the grilling season demand is going to peak. There could be some kind of a pullback on the packers and a pullback on consumer demand after we get past this peak grilling season. And that might bring some kind of a setback here with the ever-ready battery market that's been going up and up and up, defying all odds. We think the odds are favorable that we might see that.
Yeah, it has been like the Energizer Bunny, to your point. All right,
Yes.
thanks for joining us. That's Shawn Hackett with Hackett Financial Advisors. That's Markets Now.